Well, hello everyone. It is Friday, December the 16th, 2022. I am Delbridge, Benchmark Realty, Murfreesboro, Tennessee. This is your Status Chat. Now, we're not going to talk football, and we're not going to have a post next Friday, which I believe, if my calendar is correct, is actually going to be getting close to Christmas Eve. It's actually the penultimate day. It's the day before Christmas. So we won't be posting that Friday, but we need to look at this. Earlier this year, I prognosticated that it might just be possible that we hit 7.5%, maybe 8% by year's end. Are we on track to do that? And if not, why? Because it's important to understand why. We'll hit that right after this. If you like this content, please go to calldeltosell.com, find the tab that says on YouTube, click it, and it'll open up a page of QR codes. There you can use a smartphone to scan and get to the YouTube page, or you can just mouse over and click it on a PC. There you'll be able to subscribe to this little button over here and click the notification bell so that YouTube will notify you when each Friday's blog has been uploaded. Thank you. Well, the question is, were we on track? Were we ever on track? Where were we headed? Where do we get that number from? Where are we going from now? Good questions, and we'll see if we can hit them. But first I want to point out something. If you'll notice my festive holiday chapeau, if you'll notice if I move my head around, you can see right through the top of my hat. Magic hat. It's also, if you look right through the top right there, you can see through the top of my head. So maybe you can see what I'm thinking before I get there. Anyway, it's a good time of year. We need to keep our spirits up and things will be okay. So let's look at some things that might be indicating on why we did what we did and possibly where we're going in the future. From one of our favorite go-tos happens to be Mortgage News Daily. It is industry related, but a lot of the stuff we can use to look at it. And this is today's chart. And if you notice, here we have 30-year fixed rate mortgages. Now, you know that when I bring you something from the internet for the middle segment, I always put the link to that. If it's a private source, a publication of some sort, I give credit for credit in the description over on the Status Chat, where the Status Chat may be found. YouTube page. Well, see, here we were back here last year, coming up, and we started to watch the economic news. We saw that we were printing money and we were going through totally unrestrained. And once we started up with the Fed actions and we started raising rates on the target, we started developing a fairly predictable slope. And if we had carried this right on up, we probably would be close to 9. But we reset here. We reset in about mid-June. Okay, we reset that and we dropped down just a little bit. We came down about a quarter plus points. So 1.25 points, we took a dive, and then we started right back on our chart up, and that would have put us a little over 8.5. Now we've come up here from the peak about 7.25. It's actually more than 7.33, but we're going to round it down and get this point and say it's about a point and a quarter that we have now dropped down as of today. And that's a pretty good mortgage rate compared to what we were looking at and what was being forecasted. So we've come down some, so it's still a good time to look to buy a house. I don't know how much better we're going to be. I don't know if we're going to turn this corner. But you might ask me, Del, why did these two things happen? And I think certainly on this last tick down, I think we can explain it in a couple of ways. Let's go hit the news page over at CNBC. See, here we are, CNBC. This is just the main page. We're not going to go into anything in detail. We're just going to look at this. At the headlines, it says office space REITs, that's real estate investment trust, concentrated in major markets, will see big losses. Doesn't sound real cheery. Home flipping, and I hate the word flipping. It's a made-up word. It's called rehab real estate. You buy property and rehab it and refresh it, renew it, and resell it. But home flipping profits drop as the fastest pace in over a decade. Here we have another one dealing with the word flipping. Investor flipping profits hit 3-year low as margins drop. Well, yeah, they're going to drop. Mortgage application rose last week on lower rates. Well, let's flip it back. Well, yeah, people are taking advantage. They're listening to people like me who said you need to pick the time when you strike. You can't put your life on hold forever. Let's go back where we were, back at CNBC. So here we come down here, and I think I have one here I want to look at. It says, let me find it. If they haven't rolled it off the page. No, this is the one I want right here. I drove past it myself. What's it saying? Mortgage applications rose last week on lower rates, but we see that refis have dropped down 85% since last year. Now, we know that people are trying to cash out or getting ready to cash out home equity in order to pay credit card and other type of revolving credit, but we still see the rates are so high they've not yet done it. And if we go year over year, we see we've lost 85%, although we did have a little positive 3% increase in refis. So what does that lead us to? This word, you've probably heard this word or phrase, and it can be done either way. Destructive demand, this is just Google, or demand destruction. It's sort of the same thing. It just depends on if you want to call it tomato or tomato. It's the same thing. Well, what do we have here? We remember when I did that show on demand curves, and we looked at how inflation is a tax. It works just like a tax, and it causes what we call dead weight loss. Remember that it moved when we had this. When we put a tax in here, interest rates do the same thing. It created a dead weight loss. It's that zone in between where we would have had our equilibrium, and now since we were forced to a higher price, we got a lower quantity. That's dead weight loss. Those are lost forever. They don't come back. Now what this says, demand destruction says, we're at one equilibrium point. Had a little fun with that. We're at one little equilibrium point E, and then when we have a destructive demand or demand is being destroyed, we do shift it to the left, and we create another quantity here. That is Q2, and that is less than we were at Q1, because here we have quantity demanded this way, and so we're starting to destroy the quantity demanded. And finally, we come back to another point. If we keep the same price, which is pretty well much what we're doing with housing, isn't it? We're seeing some price fluctuation, but they're pretty well staying true. What this first Q does is we're saying we're bringing that down, and we're just paying at a much lower price. Our housing really hasn't done that. It's actually going up a little bit. Maybe not nearly as fast, but it's going up. But what happens when the price goes up or stays the same? If it goes up, we're going to get even further towards the 0 point. We're going to go further left right there, and we're going to destroy even more demand, because now we're drawing how many more houses are not being sold. That's the destructive from this Q, and wherever we end up, that is the demand that has been destroyed. And I think that's pretty well obvious what's going on. How does that affect our projected interest rates? When we said we thought we might hit 7.5 or 8, maybe a little more, a little less, depending on what part of the curve we were looking at. How did that happen? Let's go back to those curves that we were looking at. We see that when we go up, we had something that happened. We dropped down in our rates. Probably resulted in a little bit more sales of mortgage and financial product. We came up, we cut off to nearly nothing, started really looking bad, and we're increasing it back again as we drop that price down. The problem is we have the Fed target rate charging up at our mortgage-backed security rates, and things are clamping off. People are simply working on the lower end of that curve. They're trying to get the price down so they can close some mortgages, some refis. And what did we see in this previous spot right here? Mortgage applications rose on lower rates, but we see that refinancing applications have actually dropped off 85% of where they were a year ago. So it looks like the easy money, the fun money, is kind of disappearing. Well, I have one more screen I want you to look at. Is this one. We looked at that again to see if it's actually true in our area. Now, these are for the greater Nashville market, and that is November of this year compared to November of last year. And what we can see is our days on market have gone to 41 instead of 29, so that's definitely slowing down that way. But here's the big one. We're down 41% on pending closing. So that means that that's 41% less loans that are getting closed out, which means they're writing fewer loans. They're selling fewer loans. That's really what it is. It is a financial package. So when we go back and we look at that curve, when we look at it, we'll see those shapes, and we'll see that as we drop that down just a tad, it spurred. A few more people were ready. They were coiled, ready to go, ready to snap on that opportunity, and they did. But even with that, we're still down 41%. Let's look at that again. That's this action. We pretty well much choked it off as it was going up toward that 7.5. We almost hit 7.5 back in October. So it wasn't really a big stretch. If we were just kind of leveled off, we would have probably hit around 7.5. We'd hit our target. But what happened? The demand was destroyed. Simply put, we can't afford the higher prices, and the prices of the homes are not coming down particularly. They're going up a little bit. And as we go this way on price axis, we're going to have fewer and fewer down here on the quantity demanded axis. And this is just macroeconomics. Let's look at that left panel again. What did we see on the median price? We saw it was 460. What was it year over year? It was, where are we at? We're down here, 425. So prices are going up still. And what is that going to do to quantity demanded? Right here is reflected in that number. We're driving them down. We are driving them back down. So that's what happened. No, we didn't hit that magic number of 7.5 that we were looking at, but it's because as we sell fewer and fewer mortgages, people are beginning to trim a little bit. And it's being reflected in the mortgage-backed security market and the people who are doing the buying of those bonds. So anyway, that's it. What do you say we get back and wrap this up with this week's numbers? Hello, I'm Delbridge of Benchmark Realty, Murfreesboro, Tennessee. If you are currently unrepresented and would like to know how to compare up to 3 properties side by side and room by room, then go over to my new YouTube channel. Call Del to sell. That's one L and Del, no spaces. Watch the demo on Real Scout and then call me and we'll set up your exclusive ad-free account today. Well, here we are. We've got our numbers from last week. 12/9/22, we had 18,712 opportunities in the Real Scout system. That includes the coming soons. That went up just a tad over the previous week, but not significantly. And we had 3,091 under contracts still showing. That went down just a little bit, not really appreciably, and it stayed stable at 17% integer ratio between those two numbers. It was 17 the week before that, 17 last week, and let's see what we have this week. 12/16/22, we have 18,632 opportunities. That's down over the previous week. And we had 2951 in the under contract still showing. That too is down over the previous week. And the integer ratio between those two did slip an integer point to 16%. So you need to be thinking about what we're going to do, how we're going to handle it. You need to get with me so we can get something going, and you know how to find me. You find me through all of the media links that are down at the bottom. We have a telephone, we talk, call Del to sell, and have a Merry Christmas. Thank you.